Hello everyone, welcome to Upside Down Data. Today I want to talk about a model that we've created here at Upside Down Data that can try to document how risky ADA is in any given point of time. So we've created upside downside potential indicators for a variety of assets. We've made videos about the upside downside potential indicator for Ether and Bitcoin, so you might want to check those out. And really what this indicator does, as I was mentioning, is that it lets you identify when the price is especially risky, when you might not want to be buying, when it has limited room to move up any further, versus times when it's a really great time to be buying the asset, when it has a lot more upside potential than downside. And so the way that the model works is that it ranges from 5 to -5. If it's at 5, that's when it's suggesting that the asset, in this case ADA, is at its most risky level. So that would be when you probably wouldn't want to be buying the asset, you might want to be selling it. Versus -5, which suggests that there's a lot more, it's a low risk time to be buying the asset. There's a lot more upside potential than downside potential for the asset in that moment. And so this graph that I'm showing here is the price history of ADA in logarithmic price. And what we can see is that it's done a pretty great job at identifying when it's risky to be buying ADA, when it's likely to be correcting in the near future, versus when it's especially good to be buying ADA. So for example, in this peak here at the very beginning of 2018, the UDPI was spiking. It was saying this was not a good time to be buying ADA. But then down here, when ADA was actually at its lowest price, it was saying this is a great time to be buying ADA. You should really be loading up at this point. Then we had this huge run up in the spring, and it was identifying that as being a riskier time when the upside potential was becoming more and more limited. And then it identified the summer actually as being a pretty great time to be buying ADA. And what's nice about this model is that it lets you kind of cut out the emotion from the equation. So, in the summer, a lot of people were very bearish about the whole crypto market. People were saying that Bitcoin was going to fall to, $10,000. And that the rest of the market was going to crash with it. So, ADA was going to be tanking well below $1, which is, around where it was trading during the summer, a little bit over $1 to just around $1. But if you had been using the UDPI to kind of get a sense of where ADA was, you would have been able to just totally tune out all that bearishness and actually said, no, this is a pretty great time to be acquiring ADA. You really want to be loading up. And then sure enough, we had this massive run into September where ADA went from about $1 all the way up to over $3. So you would have 3x'd your money if you would have been following the UDPI, and then you also likely would have then sold up here at $3 because the UDPI would have told you that the price wasn't likely to go much further than $3. And you would have been able to take that money off, either hold it or put it into a different asset that hadn't pumped yet. You could have then potentially actually compounded your profits further by putting it into an asset that hadn't run quite yet. So ADA moved kind of early. It was one of the first layer ones to move. There were a bunch of other layer ones that followed. If you would have taken your profits from ADA, put it into one of those other layer ones, you could have been making, taking that 3x profit and then made it even more profit by doing that. And then where we are now is it's again flipping more to accumulation zone, where it's saying that ADA might be a reasonable thing to buy at the current moment. Of course, not financial advice, but that's just what the model is suggesting. So we can also look at just the raw output of the model. So this is just a UDPI score across time. And you can see that it really shoots up at these risky moments. It shoots up at these kind of market cycle highs or near the highs. And then it comes way down in those kind of good accumulation zones. So if we look at when the UDPI was really shooting up, sure enough, it corresponds pretty well to market cycle highs, or pretty close to the tops. So it calls the top really well here, back here in 2018. Here it calls this kind of local high that we had in February when ADA made its first kind of huge move up in the spring. It also starts shooting back up again in May when we had just kind of a final move up that ADA made before we had the big crash across the whole crypto space that brought prices down. But then the UDPI comes back down, says you should be acquiring ADA during those summer months, and then it shoots back up again here over 4 to this move up to $3 we had. And then sure enough, we've had this kind of correction and consolidation ever since, back down here into these more these zones where the UDP is actually suggesting it's a reasonable time to be buying ADA at this point. And so, as I mentioned in my Bitcoin video, and go back and look at that video if you want a little bit more detail about this approach, but you can use the UDPI to kind of as the basis for when you should be buying versus when you should be selling the asset. So, as you get higher and higher up on the UDPI levels, and then kind of peaking out at this kind of 4 to 5 level, you might want to start selling off in incremental amounts your, in this case, your ADA. So you might be kind of taking a little bit of profit down here, a little bit more here, a little bit more here, and then really taking profits heavily up here before the big correction comes. And then when you get back down to the green zone, you might be starting to buy a little bit more. So buy some here, buy quite a bit more here, and then kind of ride it up, sell again as you get up here, and then start acquiring again when you get down here. So kind of a weighted dollar cost averaging approach is a good way that you can use this model. So I also want to talk about where the UDPI is currently. So as I mentioned, it's really in a pretty tasty zone right now. So it's at negative 1.53. So, anything below 0, I personally consider it as being a buy signal, so that you want to start acquiring. And then the further it gets below 0, kind of the better buy it is. So again, this isn't financial advice, do your own research, but right now, ADA is looking pretty tasty. This is a point where the risk-reward ratio really seems to be in your favor. So if you were to be loading up on ADA right now, the model suggests that you can expect there to be more kind of upside potential than downside. It's kind of a trade that might be weighted a little bit in your favor. So again, not financial advice, but that's what the model is currently suggesting. Now, another cool thing that we can do with this model is that instead of comparing the price of ADA, or the value of ADA to the US dollar, we can actually look at its valuation versus something like Ethereum, which is kind of the main layer 1, kind of the prominent layer 1 that people might be investing in. And you can ask the question, is right now a good time to be buying ADA, or would it actually be better for me to be buying Ethereum? Is Ethereum likely to be able to put in more upside potential relative to ADA than ADA is able to put in upside relative to Ethereum? And so what we have on this graph here is the ADA to Ethereum valuation across time. So basically how much Ethereum is an ADA worth at a given point in time. And so then what you can see again is that the UDPI is pretty darn good at calling out points where ADA is kind of maybe a little bit too high in its valuation against Ethereum, and it's likely to fall. So ADA is going to underperform Ethereum in the near future. And then it's also good at calling out these green points when ADA is likely to outperform Ethereum in kind of the coming future. And so the way you can kind of read this is that when the UDPI is red, then you might want to be buying, selling your ADA for Ethereum, but when it's in the green zone, you might want to be selling your Ethereum for ADA. And then sure enough, what ends up happening is that if you do that, then when ADA's been in the green zone, it tends to have this big run against Ethereum into these red zones, and then that leads to a correction where Ethereum might run against ADA, or ADA might bleed against Ethereum back down to these green zones, and then up and down, up and down. And so this is a way that you can kind of get a sense, if I'm going to be buying ADA or Ethereum, which one should I look at? Or, if I already have ADA and Ethereum, should I be trading one for the other potentially? Because I might expect more upside from one versus the other. And so again, we can look at the raw output of the UDPI for the ADA Ethereum valuation. And what we can see is that right now, we're actually getting pretty darn low. We're almost at -4 on the UDPI for the ADA Ethereum valuation. And what this means is that we can expect the valuation of ADA relative to Ether to go quite high. It's unlikely for ADA to bleed any more against Ethereum, or it's unlikely for it to bleed much further. And in the future, we might expect actually for ADA to outperform Ethereum. That ADA might be a better thing to have your money in, because we might be able to expect better ROI from ADA relative to Ethereum right now. But in times when the UDPI is quite high on the ADA Ethereum valuation, that's when you might actually be preferring to be buying Ethereum or trading your ADA for Ethereum, because it's likely for ADA to bleed against Ethereum, or for Ethereum to be outperforming ADA in the near future. And so as I mentioned, right now, it's suggesting that it's kind of an asymmetric trade in favor of ADA, that if you're going to be putting money into the market, and you're choosing between Ethereum or ADA, it's really looking, according to this model, like you're going to do better off putting your money in ADA. So again, not financial advice, do your own research, but that's what the model is suggesting to us. And this is another way that the UDPI, I think, is really helpful. It's not only can we look at the value of an asset relative to the US dollar and how risky is it to be buying the asset in a given moment, but also lets us look at these comparisons between two different assets, in this case ADA and Ethereum, and ask, if I'm going to buy one or the other, should I be buying ADA? Should I be buying Ethereum? And right now, the UDPI is looking much more favorably on ADA relative to Ethereum. Alright, well, thank you so much for watching the video, and just remember, with the UDPI, we're all going to make it.